Everyone, welcome again to this session. In this today's video, I'm going to be recording how I'm going to be sharing all the basics and all the notions you know about pips. So basically, pips is what actually causes the market to move. So in this video, stay tuned and watch to the end so that you will understand the concept very well. All right, let's move on. So basically, what you need to do after you must have downloaded the app, the MetaTrader 4 or MetaTrader 5 app, you can go straight to the trading zone. So for today's session, I will use GBP USD to make our analysis. I hope you understand. So our analysis will be based on the GBP USD. GBP USD is the Great British Pound. The Great British Pound versus US dollar. So that's what I'm going to be using for this video. Generally, it is a concept that works for all currency pairs. So stay tuned and you will grab all the notions I will be discussing in this video. So if you look keenly at the GBUSD, the last currency pair I just added, let me just click it. I already uploaded you last video showing how you can when to buy, when to sell. So for today's session, I will go straight to new order. The purpose of this video is to explain to you what is a pip. So like I said, pip is a measure and the extent to which a currency pair can be moved. I hope you understand. So generally, traders count their profit in pips. So if I'm talking to respect to a trader who is trading forex for some time, I'm not going to say I made $10 today, I made $100 today, I made $1,000 today, I made $50,000 today. No, that's not the language I'm going to use. So to understand and simplify things, I can say I made, for instance, 50 pips, I made 20 pips, I made 80 pips, I made 1,000 pips. Is a language any trader wants that is being communicated to him. He will understand what you are actually speaking of. So basically, let's go to what we have for today. There are currency pairs, 4-digit currency pairs, and there are 5-digit currency pairs. So for this one, GBP USD, they are basically, yes, it's an example of a 5-digit currency pair. I hope you understand. So if you look at this currency pair keenly, the currency pair you see is 1:2135 to the power 2 on the left hand side, and on the right hand side you have 1:2136 to the power 5. Yeah, the market is moving. This is a live trading. I hope you understand. This is a live trading. The market is moving. Or let me just close my data so that it will be fixed. You will not have all right. So the market now is fixed. Let's take the currency pair at the right hand side, which is 1:2136 to the power 6. The one on the left hand side. So you are going to understand that the currency pair there is 1:2136 to the power 6. So what you have to understand here is that the last six, which is the let's begin from the last 6 from behind. The first 6, which is the power 6, is what we refer to as a pipette. It refers to as a pipette. Normally, you can call it that 6, which is being raised to that power, as a pipette, or you can call it a micro pip. I hope you understand. So combination of a pipette or combination of micro pips forms a pip. I hope you understand. So the first 6, which is not raised to the power 6, is what we refer to as a pip, as in 10, as in 1. That's a pip as in 1. I hope you understand. So the first 6, which is not raised to the power 6, is being referred to as a pip, as in 1. The 3 beside that 6 is what is being referred to as a pip, as in 10. I hope you understand. And the 1 beside that 3 is being referred to as a pip, as in 100. And the 2 beside 1 is being referred to as a pip, as in 1000. Then the pip as the figure 1, that means 1 just beside a dot is being referred to as a pip as in 10,000. I hope you understand. So bringing that example to the other value that you see on the right hand side, 1:2,1,3,4 to the power 3. Basically, if you understood the concept I discussed, it means that the 3 raised to the power 3 there is a pipette or a micro pip. The 4 is a pip as in 1. The 3 is a pip as in 10. 1 there is a pip as in 100. 2 there is a pip as in 1000, and 1 is a pip as in 10,000. I hope you understand. So basically, those are the parameters we use in forex trading. So for instance, if I say I made 10,000 pips today, I made 50,000 pips today, I made 1,000 pips today, to any forex trader who understands the concept of forex trading, he will basically understand the extent of the profit I have made. And the next question he'll be asking me is my lot size. So the question he or she will be asking me is my lot size. I hope you understand. So basically, this figure, this one inside, if I read, it cannot go. Let me on the data so that we can go live again. We can do live. All right. So let's move on. So basically, I have on the data so that you can see. So if I change this figure, if I can change this figure, as you see here, I can change the figure to 1. I can change that figure to 1, and I can change that figure to. I can also change the figure to instance to 10. I hope you understand. I can even change the figure to 100. I can even change the figure to 1,000. The maximum is 100. And also this figure, as you see here, that particular figure can also be in this context. I hope you understand. It can also be in this context. It can be in whatever form you design it to be. It can be in this category as well as it can be in this form. So it can be in whatever form you desire it has to be. So what is this particular value? Where are we? This particular value is refers to us what we call lot size. You have been getting from traders discussing about lot size. So that is actually what we talk of a lot size. So basically, there are 3 main types of lot sizes. We have what we talk of a standard lot size, we have a micro lot size, and we have a mini lot size. So generally, a mini lot size is a lot size of 0.01. I hope you understand. So any lot size that ranges from 0.01 to 0.09 is what is being referred to as a mini lot size. So, and another example of a lot size is what we've been referred to as a micro lot size. So a micro lot size is any lot size that ranges from 0.1 to it ranges from 0.1 to 0.9. I hope you understand. So you can change this to 0.9 if you want. Let me put 0.9. So it can be 0.9, it can be 0.91, whatsoever. So any value that ranges from 0.1 to 0.9 is what we refer to as a micro lot size. And the third category of lot sizes that we have is what is being referred to as a standard lot size. So a standard lot size is a lot size of 1. So one day, whenever you see 1, we are talking of a standard lot size. And that is standard lot size. Yes, from 1 you can have other lot sizes that you can modify to be 9, for instance. It can be 10, for instance. It can be even be 20, for instance. It's an example. It can even go up to 100. I hope you understand. So the lot size can go up to 100. Be careful. This is the core of forex trading. So this basis of forex trading is being centered at lot sizes and pips. I hope you understand. It's being centered at pips and it's being centered at lot sizes. Now let's see how the market move. Let's see how the market move based on these parameters. So let's begin with the mini lot size. Remember, I said the mini lot size is the smallest lot size you can ever have. So if you have been following very well, you understand that the mini lot size is a lot size of 0.01 to 0.09. So let me explain this with respect to what I said with pips. So depending on the type of currency you are trading, remember I said this is a generalized principle. It works with a Great British pounds versus the US dollar, and it's a general principle that applies to nearly all currency pairs. So like I said, for this mini lot side of 0.01, a pip move, it means that if the market move by 1 pip, it means that we are making a profit of $0.01, or we are making a loss of $0.1. I hope you understand. Don't miss the concept. Let me repeat again. It means that for a pip move here, if the market move, for instance, by 1 pip, it means that we are making a profit of $0.1, or we're making a loss of $0.1. I hope you understand. It means that we make a profit of $0.1 if the market is in our favor or in the positive direction that we predicted, and we make a loss of $0.1 if the market is going against our direction. I hope you understand. It means that for this mini loss side of 0.01, if the market moves by 10 pip, it means that basically you are making a profit of $1 if it is moving in the direction you predicted, and at the same time, if the market moves in the wrong direction, opposite to your direction you predicted, it means that you are making a loss of $1. I hope you understand. In the same sense, if the market move, for instance, by 100 p for this 0.01, it means that you're making a profit of $10. And if the market moves by 100 pips in a negative direction, you are making a loss of you're making a loss of $10. I hope you understand. It means that for 1,000 pips, remember I already explained 1,000 pips there. It means that if the market moves by 1,000 pips, it means that you are making a profit of $100. And if the market moves by 1,000 pips against your direction, you are making a loss of $100. Like I said, I understand the concept very well. Is the course of forex trading. So you can do the analysis for 10,000 pips, you can do the analysis for 2,000, 20,000 pips, and also you can equally change the loss side from 0.01 to 0.02. So it means that if you change the loss side from 0.01 to 0.2, it means that what you'll be experiencing here will be twice than what was happening with the loss size of 0.01. It means that, for instance, for 0.02, if the market move, for instance, by 100 pips, I am making a profit of $20 if it was in my direction, and a loss of $20 if it is against my direction. I hope you understand. And if it moves by 1,000 pips, it means that I will make a profit of $200 if it is in my direction that I predicted, and I also make a loss of $200 if it is against my direction that I predicted. You can do the analysis for the ray and the rest, and it goes to the same aspect up to the 9. Remember, I said a mini loss size, a loss size that ranges from 0.01 to 0.09. That's the case for what it has to do with a mini loss side. Let's take the case of a micro loss side. Remember, from the very beginning, I said a micro loss side is any loss side that begins from 0.1 to 0.9. I hope you understand. So this one actually moves with dollars. It is simple. This one, a pip move equals $1 gain or $1 loss. I hope you understand. It means that if the market moves by 10 pips, you are making a profit of $10, and if the market moves by 10 pips against the direction, you are making a loss of $10. At the same time, if the market move by 1,000 pips, you are making a loss of 1,000 pips if it's against your direction. And if the market moves by 1,000 pips in your direction, you are making a profit of $1,000. You can do the analysis, but respect the concept of pips that I just explained to you. For instance, let me just remind you that a lot size is a unit in which a currency pair can be exchanged. I hope you understand. Like, let me say, it's a counting unit in which a currency pair can be exchanged. Like, for instance, if you are going to the market, there are units in which things are being sold in the market, for instance, kilogram and the rest. So this is the counting unit in forex trading. So that was a case of a micro lot size of 0.1 to 0.9. So let me go to the standard lot size. To the standard lot size, I say the standard lot size of 1 is a 1 many traders. Okay, this is a standard lot size of 1. I hope you understand. So basically, a standard lot size is a standard lot size of 1. Like I say, is a unit traded for big accounts. Remember, this is just for big accounts. Big accounts. Remember, always take note. This is big accounts, and it is very risky. Big accounts are accounts maybe from $1,000 and above. You can trade this. So generally, a pip move for this standard lot size is equals to $10 loss or $10 gain. It means that if the market move by 1 pip, you are making a profit of $10, and if the market move by 1 pip against a direction, you are making a loss of $10. In the same sense, if the market move by 10 pips in your direction, you are making a profit of $100, and if the market move by 10 pips against the direction, you are making a loss of $100. And in the same sense, if the market move by 1,000 pips in your direction, you're making a profit of $10,000, and the market move by 100 pips against the direction, you're making a profit of, I said 100 pips, right? So if the market move by 100 pips against the direction, you're making a loss of $1,000. I hope you understand. And if the market move by 1,000 pips in your direction, you're making a profit of $10,000. And if the market move by 1,000 pips against the direction, you are making a loss of $10,000. Remember, this can occur in a second. When I talk of direction and when I talk of against your direction, it's simple. It just means that, for instance, if my predictions for the market was for a buy and the market begins to sell, it means that the market is going against my direction. That's what I mean. You are making a loss. So if you place a buy when the market was selling, you are making a loss. And you place a sell when the market was buying, you are making a loss. That is why you have to follow the right technical analysis. And the right technical analysis, you will not get it anywhere but in this my channel. You must get it because I go in for the best. You can testify. So basically, you can do that analysis not just for this standard loss of 1. You can do the analysis for instance. You can move that from, you can move 1. It's okay. You can move 1. Let's move 1 and take 2. Okay, let's take 2. For this 2, it means that if the market, let's put 2 at the door. Let's put 2 at the door with 0 0. Yeah, 2 0 0. It means that for this one, if the market moves by a pip move will be equals to $20 loss or $20 gain depending on our direction. So if you take a direction, a buy, if you buy and if you place a buy and a buy order and the market move in our order, it means that if the market move by a pip, we are making a profit of $20, and the market move by a pip against a direction, we are making a loss of $20. If the market move, for instance, by 10 pips, we are making a profit of $20 in our direction, and if it is against our direction, we are making a loss of $200. And if the market move by 100 pips, we are making a profit of $2,000 in our direction, and if it is against our direction, we are making a loss of $2,000. So that is just the analysis. So this, like I said, you cannot trade forex. You cannot trade forex without understanding this principle, else you'll be off the market. So with this principle, if you are beginning if you are beginning forex trading and your account is less than $100, first principle, the first principle, I repeat I repeat and I keep on repeating again with diligence. So the first thing, if your account is less than 100, let me say from $10 to $100 account, your lot size should be 0.01. Yeah, it's true with me. I don't have problem trading forex anymore because I trade forex with all levels, at all levels. I have raised $2 account to $5. I have raised $5 account to $50, and I have raised $5 account to $100. And for that, trading small accounts is not my problem anymore. I can trade big account, I can trade small account. I have no problem with that. So the first thing you have to do, if your account is between $10 to $100, the first thing is that your lot size must be 0.01. Always change your lot size to 0.01 immediately when you download the MetaTrader 5. And if you have not downloaded the MetaTrader 5, you can go to Google Play Store and download the MetaTrader 5, or watch my video that I captioned how to start forex trading practically. You get some guidelines. I think I documented a video on that. So I hope you understand. Any account from $10 to $100, your lot size must be 0.01. I hope you understand. Don't go beyond 0.01, else you are going to risk your account. I have traded, I have experience, I have blown account, I have made much money. Yes, I'm saying this with principle. When I began forex trading, I was excited. When I made profit. I would like to increase my account. I would like to increase my lot size, for instance, to 0.02. At times, I would like to increase my lot size to 0.03. And at times, I even go as far as increasing my account to 0.05. There was one, I even increased it to 0.9. And when you do like this, it's just the fastest way to blow your account. Blowing your account means your account will be wiped out. How your account will be wiped out? Your account is going to be wiped out when the total negative that is going against your direction will be more than or equal to your trading capital. For instance, if the trade going against you is -10 and your total capital is $10, your account is going to be blown. And in the same sense, if your total capital is, for instance, $100 and the trade is going against you, it reaches -100, your account will be wiped away. The same way, if your account is 1,000 and the trade is going against you, -1,000, your account will be wiped away and you lose all your money. Forex trading don't respect feelings. They don't respect your feelings. It's okay. Here, you do the right technical analysis or you're out of the game. So stick to my advice and you'll be a profitable trader. I give you these things free of charge, but they cost me more than millions. So stick to this advice and you'll be a profitable trader. For accounts above $100 to, let's say, $500, yeah, you can trade 0.02 lot size. No, I mean 0.02. I believe in this principle, in not just focusing on making profit, but also focus more in protecting your account, because protecting your account is what will make you to be a continuous and a profitable trader. So if your account is from $100 to, let's say, from $100 to $500, you can trade this lot size. You can trade lot size of 0.02, and in this aspect you can open maximum 5 trades. Yeah, maximum you can open 5 trades, or maximum you can even open 5. Yeah, you can open 5 trades in this position. And if your account is above $1,000, you can open trade of 0.5. You can open a lot size. If your account is 1,000 and above, you can open a trade. You can open a trade of this lot size. Let me show you of this lot size. Yeah, you can use the lot size, and you can as well use this lot size of 8. Yeah, 0.08. and with this 0.05, 0.08, you can open 5 to, you can just open 5 to, yeah, 5 trades. Don't risk your account. But by the way, the first principle is that do not risk more than 2% of your trading capital at any time. That's the first principle. So do not risk 2% of your trading capital anytime. I hope you understand. And from $10,000, and above, you can trade with 0.1. Yeah, you can trade with 0.1 as well. You can trade with a standard lot size. Yeah. So that is it, what I had for you today. I hope this video has been interesting. Hit the subscribe button, and also hit the notification button so that when a video comes out, you'll be the first to be notified. By the way, what you see here, the plus sign you see here, I will be explaining that in another video. I'll be explaining that video in another. I'll be explaining that concept where you see those plus and negative side. For instance, when I press that plus, you see a value increasing, right? That value increasing, and when I place with the plus on the left side, you see that value increasing, and when I place this on my right side, you see that value also increasing. The value is increasing from, you see, 30, 35, 38, 40, and the rest. And at the same time, for the purpose not to make this video so long, I will be explaining that concept in another video. That concept is a concept of stop loss and take profit. So I'll be explaining to you in another video on how you can set that stop loss and that take profit. So for now, stay tuned, be a profitable trader, and always use the advice I have spoken to you in this video. See you and be a profitable trader. I love you all. And not to forget, I will put a link in my description, our Telegram community, Sambuin Forex, or you can check me on Telegram automatically, Sambuin Forex. But I will leave the link in the description so you can join our Telegram community. I go there once times. I share signals, free signals, trading signals, and other inspiring stuff. In Facebook, my Facebook page, you can also check me, Sambuin Forex. I do share some powerful stuff there as well. So that's what I had for you today. Stay cool, and I love you all. Continue to be a profitable trader. Peace out.